You paid every single bill on time. Not once did you miss a payment. You even set up auto pay just to be safe. And yet, you checked your credit score this month and it dropped. How? Why? Is the system broken? Or is there something happening behind the scenes that nobody ever told you about? Here's the truth. Paying on time is only one piece of the puzzle. There are at least 6 other things silently dragging your credit score down, and most people have absolutely no idea any of this is even happening. By the time you finish watching this video, you'll know exactly what those things are, how to stop them, and what to do right now to fix your score. Because your credit score affects everything. Your rent, your car loan, your mortgage, your interest rates, even some job applications. So let's get into it. Most people think credit scores are just about whether you pay your bills. But your FICO score, used by 90% of lenders in America, is calculated using 5 different factors. Payment history is just one of them. It makes up 35% of your score. But that still means 65% of your score has nothing to do with whether you paid on time. The other 4 factors are credit utilization at 30%, length of credit history at 15%, types of credit at 10%, and new credit inquiries at 10%. Every single one of these can tank your score even if your payment record is spotless. And some of these drops can be massive. We're not talking about a 5-point dip. We're talking 50, 80, even 100-point drops. Reason number 1, credit utilization. This is the percentage of your available credit you're currently using. The rule is to stay under 30%. But here's where people get tripped up. Even if you pay your full balance every month, the balance can still get reported before your payment posts. Here's exactly what happens. Your statement closes on the 15th. The card company reports your balance to the bureaus around that date, but your payment isn't due until the 10th of next month. So if you spent $4,000 and plan to pay it all off, your credit report may still show a $4,000 balance for weeks, and during that time, your score gets hit. The fix? Pay your balance before the statement closing date, not just before the due date. These are 2 completely different dates. Go check your credit card app right now. Find the closing date, pay before it. Advanced tip, keep your utilization under 10%, not just 30%. People with scores above 800 typically carry utilization below 7%. That's the elite zone. Reason number 2, hard inquiries. Every time you apply for a new credit card, car loan, mortgage, or apartment, the lender pulls your credit. This drops your score 5 to 10 points per inquiry. The problem is people apply for multiple things in a short period. A new card, a car loan, a store card at checkout, and suddenly you've had 4 inquiries in 3 months and your score dropped 30 to 40 points. Hard inquiries stay on your report for 2 years and impact your score for about 12 months. Be strategic. Don't apply for new credit unless you need it. And before a big purchase like a mortgage, stop applying for anything else for at least 6 months. Go to annualcreditreport.com, the only official free site for your full credit report in the US. Check your inquiries section. If you see hard pulls you don't recognize, that's a red flag. Someone may have applied for credit in your name. That's identity theft territory, and most people don't find out until they try to buy a house and get rejected. If this content is helping you, hit that subscribe button. I breaks down finance in a way that actually makes sense. No fluff, no jargon, just the real stuff. Reason number 3, closing old credit card accounts. Most people think this is responsible. In reality, it can drop your score significantly. Your score loves old accounts. When you close one, your average account age drops, and so does your score. Example, 3 cards opened 8, 4, and 2 years ago gives you an average age of 4.5 years. Close the oldest one and your average drops to 3 years. That single move could cost you 20 to 30 points. The better move is keep old accounts open, put a small recurring charge on them, like a $5 streaming subscription, and set up autopay. Keeps the account active with almost 0 effort. Even closing a card if the annual fee is high and you get 0 value, ask to downgrade it to a no-fee version first. Reason number 4, errors on your credit report. Roughly 1 in 5 Americans has at least one error on their report. These errors can include accounts that aren't yours, late payments that were paid on time, settled debts still showing as unpaid, or balances listed higher than they are. Any of these can drag your score down by dozens of points. You have the legal right to dispute errors under the Fair Credit Reporting Act. The bureaus must investigate and correct them within 30 days. Pull your report from annualcreditreport.com, go through it line by line, and file a dispute directly with Equifax, Experian, or TransUnion. People have seen their scores jump 50 to 100 points just from removing incorrect negative items. It costs nothing, just time and attention. Reason number 5, credit mix. 10% of your score comes from having different types of credit: cards, auto loans, student loans, mortgages. If you only have credit cards, that limits how high your score can go. People who hit 800 almost always have at least one installment loan and one revolving account. I'm not saying take on debt just to improve your mix. That's dangerous advice. But if you are already considering an auto loan, know that handling it responsibly can help your profile over time. Focus more energy on utilization, errors, and inquiries. That's where most people leak the most points. Reason number 6, being an authorized user on someone else's account. You might have been added to a parent's or spouse's card. At the time, it felt helpful, but if that person misses payments or maxes out the card, that behavior shows up on your credit report too. You didn't use the card, you didn't miss a payment, but your score drops anyway. The fix? Ask to be removed from any account where the primary holder is struggling. Call the card company yourself. Once removed, that account typically disappears from your report within 1 to 2 billing cycles. On the flip side, being outed to an account held by someone with excellent credit and low utilization can boost your score. Just make sure they have great financial habits, or you're borrowing their problems too. Now let's talk about the actual action plan. Week 1. Pull your free report from annualcreditreport.com, all 3 bureaus. Go through each one, write down every negative item, every hard inquiry, every balance. This is your battlefield map. Week 2, dispute every error you found. Do it online through each bureau's website. It takes about an hour total. File separate disputes for each item. They have 30 days to respond, and some errors get removed in as little as a week. Week 3, tackle your utilization. Find the statement closing date for each card. Set calendar reminders to pay down balances before those dates. Aim for under 10% per card. Getting from 50% to 29% can give your score a real jump within 1 billing cycle. Week 4 and beyond, stop applying for new credit unless necessary. Keep old accounts open. Use free credit monitoring tools like Credit Karma or your bank's inbuilt app, and stay consistent. Your score is a long-term reflection of your habits. Here's what I really want you to hear. The credit score system was not designed to be easy to understand. The more confused you are, the more mistakes you make. The worse your score, the worse your interest rate. The higher your interest rate, the more money goes to the lenders. A difference of 100 points can mean tens of thousands of dollars. A person with a 760 score buying a $400,000 home might pay 2% less in interest than someone with a 640. Over 30 years, that's over $80,000 in extra payments. So here's your challenge. Pull your credit report this week. Take 20 minutes. Look at what's actually on there. You might be fine, or you might find something that's been quietly costing you money for years. Either way, you'll know, and knowing is worth everything. If you learned something new, share this with someone who complains about their credit score. And if you want more real financial education, I'll see you in the next one. This is Albert. Stay smart, stay informed, and never stop learning.